Okay, so you've enrolled in an OCIP, an owner-controlled insurance program, or also known as a RAP policy, or a CCIP, a contractor's controlled insurance program. Basically, what's happening is the developer or the main contractor, the primary contractor, or the person that's going to build everything, they've bought the insurance for the project. Okay, so they're the first named insured. The insurance is in their name first. Okay, so in there's a deductible, and this became a topic recently where people asked about, well, gee, how does this deductible work? Well, the first named insured is responsible for a few things. So the project owner or the contractor that bought the policy, they're responsible to make the premium payments. They're responsible to pay any deductibles, and they're responsible for any audits that may happen. Okay, they're the first named insured. Now, so that's the insurance policy's reaction to the first named insured. But now when you sign up, you're a subcontractor and you're going to sign up for this OCIP or CCIP or RAP policy, and you're going to sign up. There's an agreement that you sign that makes you a second named insured. Now, what's really cool about that is a second named insured has all the same rights as the first named insured. However, you are not responsible for the premium payments, you're not responsible for the audits, and you're not responsible for the deductibles. And you think, well, then what is everyone talking about? Well, wait a second. By contract, when you sign up, you've agreed, and this is typical, so each contract has to be looked at to make sure it's the same. But what has happened is you've agreed that, look, there's a deductible, and I'm going to use a number I could just use in my head. $25,000 is the deductible, and it's a per occurrence deductible, which means that when there's an occurrence, there's a deductible of $25,000. There's also things called self-insured retention, which means when there's an occurrence, they pay the first named insured pays the first $25,000 before the insurance company gets involved. Where a deductible, the insurance company gets involved and bills back the deductible. Okay, so those are the two primary things that you'll see. Okay, the deductible usually is per occurrence, and so let's just talk about that. Now, in the agreement you had between you and the owner of the RAP, the first named insured, you're going to, as a subcontractor, you're going to agree to be responsible for your share of the deductible. Very important, your share up to at the full amount of $25,000. So let's just say you're a framing contractor and you put the frame up, the house is built, and the whole thing falls to the ground because you did something wrong in your framing. It's all your fault, 100% your fault. You did the whole thing. You're out the $25,000 because it was all your fault, right? Now, let's say there's a lawsuit brought, which happens especially in housing developments 8-9 years from now, and they name 10 subcontractors: the roofer, the plumber, the sheetrock guys, the trim guys, the foundation guys, and everybody in between, right? Everyone gets named in this. And then it all goes and they figure out, okay, you're 10% at fault, you're 20%, oh, this person's 30% of the problem was yours. And everyone gets kind of assigned a percentage. That same percentage is your percentage of the deductible. So it's not each of you pay up to the $25,000. It's each of you pay your share of whatever the deductible is. Okay, so now there's a second deductible that very few people talk about, but it came up the other day. Builder's risk. Okay, well, here's an example. So this is while the house is being built, right? So the house is being built, and let's say you're a plumber and you're sweating in a pipe in the framing and you set it on fire. Well, that's 100% you, number one. Well, number two, there's a deductible. There's a builder's risk deductible. The owner of the project bought builder's risk on the property. They've got a deductible. Let's say that's $10,000. Well, since it was just you caused it, you're going to be out the $10,000. So that all sounds kind of bad somewhat, except for a couple of things. Remember this, on the owner-controlled OCIPs or CCIPs or RAP policies, these are for the period of time to build plus the 10 years, which is the period of repose, they call it in the state of California. And that means it's one policy for all this time. So if you added up what you're paying, you'd have to add up 10 years of your policies to get to that period of time that we're talking about. Secondly, the coverage is better. Things like subsidence, earth movement, try to buy that on your own today. Okay. Thirdly, if there are 10 of you involved, there's 10 different deductibles. Each of you are going to have your own deductibles. You have them right now. Usually they're between $1,000, $2,500, or $5,000 for subcontractors. Smaller, if you guys are just doing some residential housing, those are your normal deductibles. Well, that would be 10 times whatever that is. So there's the deductible anyway. So it's not like you're getting a deductible you didn't have. Where I think the confusion happens sometimes is you think that, oh, each of you are going to pay the $25,000 deductible. You're going to pay your share of the deductible, okay? And then if you're the one that caused the damage while the house is being built, of course, then you're going to pay your deductible on the builder's risk. Now, there is a lot more to all of this, but I'm going to tell you this. If I was a subcontractor and I wanted to build houses, I would build houses for developers that are using RAP policies or OCIPs, because they've transferred all that burden of all those lawsuits and all that hassle from you to them. They're taking it all. Very simple deal. And a lot of times it doesn't seem simple just because no one's taken the time to explain it to you. My phone number is going to be here somewhere, or you can just Google Grant Davis GDI and find me. Go ahead and call me. Have your attorneys call me. I'm happy to talk to anybody about it. I know an awful lot about it. Just because I believe in them so much, because once I learned about it, it was like, wow, this is the best way to do it that I can find anyway. So if someone knows a better way, I'd like to hear that too. But I think I can explain it to you and help you understand whatever questions you have and whatever contracts you're looking at, and then just be happy to do that, because I'm a promoter of this. I think this is one way that we can all help keep the cost of insurance down. By the way, this is the least expensive way to buy the insurance. Oh, and one more thing. These aren't $1 million policies. You know how you as a subcontractor, I got $1 million policy, maybe a little umbrella. These RAP policies, these are much bigger policies. They come in varying sizes, but they're getting enough insurance to cover the subdivision. So you're safe again that way. Hey, give me a call, 209-634-2929, Grant Davis. Thanks for listening.